Good morning, traders. It's 9 a.m. Eastern U.S. time on Tuesday, the 26th of September, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, mostly unchanged. The Nasdaq is leading up at 23.5 points. Remember, the Nasdaq was leading down yesterday. The US dollar is gaining some ground, up 0.42%. The laggard today is gold. It's gold and crude. The Brent this morning hit a 72-month high. Brent crude touched a 27-month high of 59.49 a barrel on Tuesday after Turkey threatened to cut off Iraqi exports. But crude itself is down 0.61 or 32 cents. It's rallied a fair amount. It has moved away from its composite point of control and is trading in a flat-ish area on the profile. Most of the products that are underwater are safety products. Markets allocating to risk slightly this morning. We had a run up yesterday as anticipated on Hypo 3 in the ES, and the market's pushing up against it. The ES is currently trading 24.9850 98 quarter with a high overnight of 24.9850. As far as so the key elements expected today, the 10 o'clock will give us new home sales in the U.S. as well as consumer confidence. And that's about it. We do have, as I said yesterday, we have a parade of Fed speakers or central bank speakers. At 9:30, we get Fed's Mester, Fed's Brainard at 10:30, Fed's Bostic at 11:30, and Fed's Chair Yellen at 12:45. Speaking on inflation, uncertainty, and monetary policy, the market is very, very likely to be paying attention to that. So that's how things are shaping up there. As far as what we've got in terms of what the market did versus what we expected, this is the primary expectation yesterday. For those of you who attended, you recall me saying that this is likely to break the one-time framing up on the weekly. I'll discuss that in a minute. But I was expecting yesterday mostly lower. The key hypothesis or the first plan of the day is lower, expecting a fair amount of resistance in the 2502 area. The secondary hypothesis was to test lower into the MC point of control and to push up, which did not happen. What actually happened is this. We pushed, this basically was on the dot. We pushed to the point of control, rotated down. Wow, that's a loud bird. Rotated down on an impulse, continued down to 24.8550 and pushed up. Remember, this was posted pre-market. They don't always work out so perfectly, but yesterday definitely gave us a chance to see a market that's auctioning a little bit better. Here's what actually happened. Open auction. Market open auctioned. And let me extend this a little bit. Let's size this at 75%. Open auction, as you can see, the opening swing up, down, and back up. That gives us an opening swing low down here, an opening swing high up here. The point of control is closed. Then we get the impulse down right to that 24.8550, 85 quarter area, pushed to 24.85. Remember, here's what was expected. Impulse push up, impulse down, and then push into 24.8550. It did so earlier, of course. The expectation was for it to push, pull, continue, push, pull, and then correct. That was the hypo, but this went right to that naked point of control, naked close from the 11th, from November 11th, and then just beautifully pulled back to the mid here. The blue line is the mid. We have a fairly large impulse down, mid test rotation, higher low, but this gave us plenty of room to scale out, gave us um, some good structure to control risk with. As you can see here, consolidate, break. This would be, for me, would be an add area or an area to use to control risk to extend the downside, aiming for a lower low to 24.85 even. The market then turned around and went right back into that cluster, and then it broke through to mid, tested again, and it finally broke higher. Again, this was what was expected yesterday. Expected it to go higher later in the session. So the key elements is test the point of control up, impulse down, test the point of control, the naked point of control lower, and then impulse up on the close. And we saw those components play out almost exactly in yesterday's session. So this is what we got yesterday. Now, so here's what it looked like on the 15-minute, which is what I used to put the hypo up. It did test this earlier than expected, but it's all good. We like selling. It shakes things up a little bit. As far as what it has done overnight since is it finished up strong. There's some pretty good delta on the close to the buy side, pushing us back into the prior range. And since the close, it has fallen, but really the market hasn't done anything overnight. The volume's pretty good overnight, 178,000 contracts in the Globex session, and Globex for me is from 4:15 onwards Eastern time, and now we're pushing up higher against um, the overnight high, so it's looking relatively strong. We're moving away from the prior point of control. And yes, it is a normal variation day yesterday. We're moving away from the prior point of control, so it looks like it has a little bit of strength. However, I would caution those who are thinking buy the dip and hold here. That may be the case. It's been the case for some time, but we broke the one-time framing up that existed for weeks. We broke it yesterday. We have a lower low. Okay, so we've moved up. Now we have a lower low. And I'm going to scroll back and show you what happens when we do that. When we take the one-time framing up. So here's one-time framing up. This is the beginning of it. One-time framing up, one-time framing up. This is the weekly. One-time framing up. And then here it's broken. We generally break it pretty violently, as you could see here. So that's just in July. If we go back even further, we'll see again, same thing. The market one-time frames up. So it starts to, here it is, one-time frame up, one-time frame up, one-time frame up, one-time frame up, and strong drop once it breaks. So just be careful there as you push to the long side. I mean, it is a bull market that's just endless and is boring and is great for investors, but let's not get carried away with the long side just yet. We still have a fair amount of resistance in the 25.02 and 3 area. And so I'm looking for it to push through, pull back, have a shallow pullback, and then really ram through that 25.02 area to put the 25.07 all-time high in play. Okay, so that's how things are shaping up currently. This morning's plan, we are pushing up against yesterday's the prior day's high. The prior day's high and the overnight high. I'm expecting an open auction out of in range, out of value. I'm expecting it to trade both ways, and I'm looking for it to take a small dip but push through and start to tackle that 25.02, consolidate, and then fall back into yesterday's range. Today, I'm not expecting too much in terms of range. Probably somewhere around 8 points or so as the market resumes, but I'm looking to the downside. Um, the secondary hypothesis is if it starts to push higher and we get an open test impulse down, then I'm looking for a drive down into 24.92 again as a key price, push through, consolidate, continue, and then pull back up and finish in the middle of the range. Those are the two key plans, two key hypotheses for the day. That's what I'm looking for and monitoring for my trade. So if we pull back, if we open sideways and pull slowly, grind down and pull back to yesterday's close and make an attempt at yesterday's value, then I'm good to go on the long on Hypo 1 all the way down to 24.93 for a base, and I'm expecting it then to start rotating up on Hypo 1. Hypo 2, if it pushes out right away and then it fails back through, then I'm looking for the short side and I'm targeting 24.92. Those are the two key plans. So now it's just a function of waiting and watching, along with my other plans, waiting and watching to see what the market actually does. Okay, so I'll leave you with that. Nice short, compact trader bite today, so you can go on about your business. Thanks for joining as always, and thanks for RTing and liking and all those good things. Cheers.